Well, folks, are we getting into interesting times now? A dramatic market. We got stocks crashing all over the place in this market. Enphase stock got hammered 6% here today. It's down another 15% after hours. Tesla stock obviously got hammered here today. It's down more after hours. Those are going to be the two stocks we talk about at the top here in regards to, are these stocks buying opportunities with these ones getting hammered right now? Very popular retail stocks, both of these. Obviously, Tesla's a more popular one than Enphase, but a lot of retail traders are just getting absolutely wrecked, and retail investors in regards to Enphase. And so a lot of people want to know, are these stocks buying? I want to share my perspective. We're also going to talk about PayPal, which stock just hit $54 a share here today. We're going to talk about PayPal stock in this video. We're going to talk about Palantir. We're going to talk about many other stocks in this video. But at the top, we're going to focus on Tesla and Enphase specifically. So busy video. I appreciate everybody joining me as always. Thank you for being subscribed, folks. This is that time of year, folks. Dramatic market. You got crazy moves happening. The Enphase move, no one expected that today. I mean, between that stock getting hammered in the market and then also in after hours, what broke as far as that news there, no one was expecting that. All of a sudden down 15% after hours. Crazy, absolute craziness, folks. So yeah, that's what happens in earnings season, folks. A lot of drama all over this place, okay? So in regards to Enphase, right? First off, this stock has been obliterated, right? I mean, the stock is down. This is before the after hours move, right? Which is another, we'll see where it trades out tomorrow, but Enphase could be down, 15+% tomorrow, okay? But Enphase going into the after hours was already down 52% this year. This stock has a 52-week high of 339 on it, right? And so if this was a stock you're like, I'm going to buy the dip, I'm going to buy the dip on Enphase. I mean, just for this past year, it has been absolutely brutal in regards to that, right? So in regards to this whole story, it starts with a company named SolarEdge, which SolarEdge can be seen as somewhat of a competitor to Enphase, okay? And so SolarEdge is down 20% after hours. This stock was down 57% year to date, which means after today's loss is going to be down well over 60% now year to date, which is just a dramatically bad year for SolarEdge, right? So what happened after the bell in regards to SolarEdge was simply shocking. I'm talking about even more shocking than that after hours move in regards to this stock, okay? This is insane. SolarEdge Technologies basically slashed their Q3 revenue outlook. So they weren't even supposed to report today. These are premature numbers. So when a company, basically has premature numbers come out, okay, it basically means that this is a situation that they were not expecting to have to post these numbers now, okay? But it's so bad that they have to. They have to. It's like a premature birth, okay? They have to have these numbers come out now, right? There's no choice. So these numbers are so bad, okay? Citing substantial unexpected cancellations and pushouts of existing backlog from our European distributors due to higher than expected inventory in the channels and slower than expected installation rates. Installation rates for Q3 were much slower at the end of summer and in September, which usually enjoy a rise in installation rates, the company said. As a result, SolarEdge said Q3 revenues, gross margin, and operating income will come in below the low end of the prior guidance, with significantly lower revenues expected in Q4. So basically, this situation is not fixing itself. So if you think like, oh, it's not fixing itself. Lower revenues expected in Q4, and the inventory destocking process continues. SolarEdge now sees Q3 revenue of a shocking $720 to $730 million compared to previous guidance of $880 to $920. The analyst consensus was at $910, folks. That's a disaster. But that's not even the worst part. That's not even the worst part. The company also forecasts non-GAAP operating income to come in between $12 million and $31 million, and non-GAAP gross margin to come in between 20.1% and 21.1%. That's compared to a prior guidance of $115 million to $135 million in a prior non-GAAP gross margin of 28 to 31%. So their margins have been completely wrecked now, and their operating income just fell off a cliff. When you go from, you're expecting $115 million to $135 million, so let's just say a midpoint of $125 million, to now your midpoint is $22 million? What are we talking about here, okay? This business is in complete disarray right now. Complete disarray. This is a whole other level than like what we saw with Tesla last night in Tesla's earnings, right? This is a business model in absolute disarray right now, okay, when it comes to SolarEdge, right? Now, you might say, okay, that's SolarEdge. why the heck is Enphase getting hit so hard? Like, why does Enphase deserve to get hit just as much as SolarEdge or something, very similar? We'll put it like this, okay? So Las Vegas Sands reports earnings last night, right? Revenues are up 177% year over year. So hey, guess what? Wynn's in a very similar business line. So I'm going to go out there and I'm going to say Wynn's earnings are probably going to be pretty freaking phenomenal as well, right? Because Macau's booming with growth again. So Wynn's earnings are probably going to be booming, right? So think about this for a moment. If you're talking about a company like SolarEdge is reporting a disaster in their business model and they're a very similar company, let's call it, right? Little differences here and there, but a very similar company to an Enphase, well, guess what? Likely, Enphase's business is also in disarray. Maybe it's not in disarray as bad, maybe it's worse, maybe it's in the equal amount of disarray, but the bottom line is that high probability Enphase is in complete disarray as well. And their margins are likely going to come in way lower than expected. Their revenues will likely come in way lower than expected. And guess what? Their profitability is not going to be anywhere likely close to what people are expecting. Okay? It's not a guarantee, but it's a high probability. Very high probability. Okay? Now, from here, we got to talk about, is Enphase a buying opportunity? The stock could easily be trading at $90 tomorrow, $95. We'll see. Okay? Is it a buying opportunity? Well, there's a few things I really like about Enphase. I got to be honest, okay? And I don't personally own the stock, and I used to be very against the stock when it traded at crazy valuations, but the crazy valuations have kind of gone away. But here's what's interesting. Hey, Enphase has about $1.8 billion of cash and short-term investments on their balance sheet. This was as of their last quarter they had reported, okay? We'll see where the updated numbers are. That compares to about $100 million of cash they had back in 2018, right? So obviously they've made a lot of money over the years and they stacked a lot of that money on the balance sheet, right? They have about $1.2 billion of long-term debt as of last quarter, so they could pay off all that debt tomorrow and still have, $600 million or so on the balance sheet of cash and investments. That's pretty freaking impressive, okay? And look at their total liabilities, $2.4 billion. They have $1.8 billion just in cash and investments alone. That's insanely impressive. Insanely impressive, okay? So Enphase has a very good balance sheet. So that's something that I would call a very positive development in regards to Enphase. Now, here we get into a very important subject. Is Enphase really cheap? Because if you were to look at, this is like Seeking Alpha, for instance, which, by the way, if you ever want a free trial of Seeking Alpha, check out my description area. I always have like a link in there that they used back when I did a promo for them a few months ago. Gives you a free trial. So anyways, but in regards to Enphase, right, it looks like it's cheap now, right? 24 times this year's expected numbers. It's trading at 19 times next year's expected numbers, and this is based upon analyst estimates, and based upon 2025, 15 times, right? For what has, usually been a very strong growth company of Enphase, that seems cheap. Well, here's the trick, okay? Here's the trick. It might not be cheap, okay? Look what just happened to SolarEdge's operating income. So what people thought SolarEdge was likely going to earn this year for net income is not going to be even remotely close to accurate. It's going to be a long ways off, okay? So you might have thought you were getting a good value by buying SolarEdge stock until you saw today's numbers and realized, oh my gosh, I was actually getting ripped off. The valuation was actually too high I was paying. So in regards to Enphase, if they report a quarter in disarray, which is very much a possibility once again, then likely the stock's not trading at a 24 times this year's numbers. It could be trading at 40 times, 50 times, 80 times. We don't know right now, because we don't really know what's happening with these companies' margins, other than it looks like it's going to be a freaking disaster, and we don't really know what's happening with that bottom line, which means you can't even really value this company right now, because these stocks in this industry are in such incredible disarray right now, right? So think about that for a moment. So the bottom line is, in regards to this Enphase situation, I can't say, if you're asking me, is Enphase stock a buy tomorrow or not? I would say it actually, surprisingly enough, might not be a buy tomorrow, even though the stock's down so dramatically this year, and even though on paper it looks like it's trading cheap, it might actually not still be a buy in regards to Enphase. You just got to understand you're taking a big risk, because we don't know. We don't have any clue what the real profitability is going to be for this company, okay? Now, this leads to a problem for the stock market. Very large problem, okay? Here's the deal. Stocks like Tesla and stocks like Enphase are vibe setters for the entire stock market, right? Tesla stock is in my opinion, the most important vibe setter for the entire stock market. When people are feeling great, want to take risk, Tesla stock is booming, right? When people start getting scared, worried, oh boy, I don't know how things are looking here, Tesla stock is not doing very well, right? And then Tesla really leads the vibes. Enphase is that next layer lower that is also a very strong vibe setter for the market. Enphase is very like, I want to take risk, I want to go risk on. Enphase is a stock. People start getting concerned, pulling back. Guess what? Enphase drops. And I mean, look at these drops. And tomorrow it's going to be way worse. I can tell you, Tesla's probably getting hit tomorrow because of this move in the solar stocks, okay? So in regards to Tesla, 26% down. It's probably going to be down as much as 27, 28% after tomorrow, right? Maybe more. We'll see. Enphase was down 38%. As of tomorrow, it's going to be down 50+%. And that's on a 3-month basis. A 3-month basis we're looking at, okay? So this is very hurtful to the overall stock market. And so that's just something important to kind of keep in mind here, okay? Let's talk about Tesla. And then we'll talk about PayPal, Palantir, a bunch of other stocks in this video, as well as some opportunities I see and things like that, okay? So Tesla, obviously, all of us shareholders got absolutely slapped today, okay? Absolutely slapped. I mean, this stock was, got hit the way it got hit. And this was after yesterday it got hit already. Yesterday, the stock was down, 4 or 5% yesterday. So just brutal for us Tesla shareholders to go through this, right? I was able to save some face, but the one thing I'll say is I probably should have bought 4 or 5 contracts for Tesla, or maybe bought 2 of these contracts and 2 further out of the money. That would have been, I don't think I probably hedged quite enough in regards to Tesla, but it is what it is. I saved a little face, okay? Now, something fascinating I see going on out there, and that's where a lot of the Tesla community is basically saying that conference call was a disaster. And that's what I called it on the live stream, on Twitch's live stream yesterday, right? It was very bad. And, I saw this out of Electric. Tesla tumbles after disastrous Elon Musk conference call. Electric calls it, right? They've obviously been pretty pro at Tesla over time, right? I reacted to Dan Ives' video here today on the Reaction channel this morning. I also reacted to Gene Munster. Both of them had pretty poor things to say in regards to conference call, right? And so in regards to Tesla and the drop, it's more than just the numbers. It's also that conference call, right? Which, by the way, I called this whole situation. It's interesting, social media, right? It's very interesting. It always fascinates me because, if I get something wrong, there's always a million people like, oh, you're such an idiot, such a clown. Like, oh, you don't know anything. And then I was like, watch, I'm going to open up my YouTube comments today. I bet you not one person said like, oh, good call on that, or like, wow, you nailed it. Not one person, not one comment. But believe me, I get something wrong, even if it was like from years ago, there's a million people out there to kill me. Now, in regards to that social media, man, you got to take it for what it is. It is what it is, right? You guys know it. You make a Facebook post or a Twitter post, and you're always going to have that one person who says something nasty. But believe me, there's a lot more people out there that love it. That's social media, okay? Now, in regards to Tesla, are the problems going to be fixed here, okay? Here's the issue. And if you're wondering, is Tesla stock a buy or not? Here's the issue. This is not going away short term, okay? In terms of what people are paying for interest on auto loans, it's not going away. It's not going away, okay? And if anything, there's a potential that credit, in terms of car loan rates, it could go a little higher before it goes lower, okay? So that's a little something to be worried about. Also, there's a little bit of credit contracting going on right now, which means the person that used to be able to afford that vehicle, or not just afford, but be able to get that, let's call it car loan, it's more of a struggle now, okay? And if the credit environment tightens more, which the Fed's out there right now doing quantitative tightening, if things continue to tighten more and more and more, it could lead to a situation where it's even harder to get auto loan, and harder and harder and harder. Ask somebody, how hard it was to get an auto loan in 2008, 2009, 2010. It began to get very difficult to even get a loan, okay? So this is something to kind of keep in mind there, right? And remember, if people's credit scores get hurt because they've been hit by inflation, they didn't pay this bill or that bill, all of a sudden your credit score goes down, which means the interest you have to pay goes up substantially, or you don't even have that option to buy that vehicle, right? So that's not going away, right? Now, recently, real wages have started to tick up a little bit. And so we got out of this horrible situation we were in for a long time where real wages just kept going down and down and down. Tesla needs real wages to pick up substantially in 2024. How can real wages pick up substantially in 2024? If inflation is in a lower environment, let's not even say 2%, let's just say 3%, but let's say people from their jobs on average are making 4%, 5%, 6%, 7% more, then you're in a positive real wage environment, and that could definitely help us out tremendously, okay? So that's something we need to have happen, and that would be great for Tesla overall. Don't hold your breath on it, but it is a realistic potential, okay? Now, we do have something pretty exciting coming, okay? Cybertruck. Now, obviously, Elon Musk dropped the bombshell last night and basically said this is going to hurt our margins for quite some time. Basically what he said, right? So that's not good, but I can tell you Cybertruck getting out there on the road is going to be huge levels of interest. The amount of social media posts are going to be when people are seeing their first Cybertrucks in person. It's going to be off the freaking charts. More so than any vehicle, certainly in history. And in the social media age, do you know the amount of TikTok videos and people that are going to be putting them on their Instagram stories and on X, formerly known as Twitter, and all these different places? Like, it's going to be like nothing you've ever seen. You're going to see so many Cybertrucks on social media over this next year. It's going to be ridiculous. Ridiculous, okay? Every freaking influencer is going to be doing videos with their Cybertruck as they get them over the next year. And what is their opinion on the Cybertruck? Do they like it? It's going to be everywhere. The amount of buzz that will get around Tesla is going to be huge. And so that will be a huge benefit to Tesla, although the whole margin story and those sorts of things, and Tesla has a lot of work to do in terms of getting that to, let's call it big production. It's a process, right? Now, if you ask me, when will margins start flying higher? We know Tesla's margins has been sinking more and more and more and more and more. It sounds like they're going to get worse before they get better, based upon what I heard on the conference call. So when will Tesla margins start flying higher? My personal opinion is Tesla margins will start flying higher in the second half of 2024. In the second half of 2024. Why do I believe that? Well, by that time, there will be no more price cuts. If anything, I think there could actually be a potential where Tesla could start raising prices again on Model 3 and Model Y in the back half of 2024. Second, by the second half of 2024, they'll have worked out most of the kinks in regards to Cybertruck. Most of the things that were hurting margins will go away from the company. They'll have the vehicle fully ramped. And I do believe Cybertruck's going to be extremely helpful to Tesla's margins. Not in the first few quarters of production. We know that's going to be a hurt, but I do believe in the second half, you will see Tesla's margins start to improve quite dramatically. And remember, they're also going to be coming off of some pretty low levels over the next few quarters here, right? And so when I look at it from that perspective, I think, and also the buzz around Tesla and how many more people are going to be talking about Tesla in 2024, I think if you look at all those different various factors, I think it's going to bode very well for Tesla. And Tesla's also always figuring out how to strip out ways of, getting cost out of the vehicles and things like that. So, Tesla, if you know Tesla very well, they never, ever just, are content with where they're at. They're always trying to figure out how to make this better, how to process this better, how to bring it down cost here, and things like that, okay? So that's my opinion. Margins will start flying back higher in the second half of 2024, okay? Now, next question is, what do I believe the chances are the stock goes under $200, under $150, or the price that everybody was, well, I don't say everybody, but a lot of people were predicting the stock was going to $50, $60 this year, okay? So what are the chances? I think there's about an 85% probability, as I spoke about, a day ago or couple days ago. I think there's about an 85% chance the stock goes under $200. So very high probability that we're going under there somewhat soon, whether it be in the next few weeks or next few months. The chance of under 150, I would call it about a 50-50 right now. I think we're about a 50-50 in regards to this. Yeah, I think if we're going to go under 150, it's going to be because the market also starts to get hit big time. When I say the market, I'm really talking about the S&P, but really talking about the Qs. That's the only way we're going to go under 150, in my opinion. Tesla's not going to get to under 150, in my opinion, without the Qs getting hit hard as well. So if you were to get the Qs to get hit hard and all this negativity around Tesla short term, you could push this baby under 150. Now, what are the chances I think it's going back, going to $50 to $60 like a lot of people were predicting this year? I would say less than a 5% probability. Less than a 5% probability. There's always a chance of things in the market, but I call this extremely, extremely low probability, okay? Now, what do I think is a good buying price for Tesla stock overall as a long-term investor? What do I think about 300, 250, 200, 150, 100, okay? So, and remember, this is as of buying Tesla stock right now, okay? Obviously, a lot can change over the next 2-3 years, whatever, okay? If I'm looking at Tesla stock today, I don't think Tesla's a very, very good buy at $300 unless I'm looking super, super far out, okay? Tesla has a lot of headwinds to deal with here over this next year, and I mean a lot of headwinds, and a lot of it's out of their controls. Tesla can't control the economy. Tesla can't control real wages. Tesla can't control the Fed and if they're going to raise even more and if interest rates are going to go even higher. They can't control any of that. So the things that are hurting Tesla is out of their control right now. The only thing that will be in their control is Cybertruck. But there's too many other events that are basically out of their control right now. 250, I don't really like 250 either, to be honest. Now, 200 is where we get interesting. I think 200 is a decent buy level for Tesla right now in this given environment, right? And knowing what we have to deal with over this next year, but also looking at it from the long-term perspective, I really like 150. If you can get the stock under 150, I really like 150 a lot, folks. I mean, a lot. And if you can get the stock around $100, which is where I was buying the stock at the end of last year and certainly beginning of this year, then you're looking great, okay? That's just an extremely easy buy as a long-term investor to throw in the filing cabinet and call it a day. But do keep in mind, it's going to be really tough for us to hit back down to $100 outside of a complete crash in the stock market. So don't get your hopes up too much about 150. 200, potential. 150, potential. 100, very, very difficult potential in regards to that. Now, we have something that's hurting us and scaring a lot of people in a major way, okay? WTI keeps going up. We're up, 17.7% WTI is up in the last 3 months. We're going into the season where you should actually see WTI weakening, right? As you get closer and closer to winter and you get into fall time, we should see WTI weakening, and really it's just been strengthening for the last 3 months. Everything going on in, obviously, the Middle East, and this is leading to fears around inflation, right? At the end of the day, if crude oil is more expensive, it's going to lead to inflation across the economy, and we don't want to have to be still dealing with inflationary problems and worries in 2024. We want to get this crap over with. So this is a problem for the market, and also real wages, right? If you have to pay more and more at the pump, and that causes other things to go up in price, right? Because of the transportation of all the goods around the economy. Guess what? Those tomatoes got to get to the store somehow, right? That case of water has got to get to the store somehow. The gallon of milk's got to get to the store somehow. It's transportation, right? It's oil price. So this is leading to real wage fears in 2024 overall, and it's definitely something that is I'm thinking about. And this is leading to a lot of weakness in a lot of stocks, folks. Look at CCL. CCL is down 37% in the past 3 months, folks. CCL's calling my name. I don't know if I'm going to answer the phone, but it's calling my name, folks, okay? Look at Delta Airlines. 32% in the past 3 months? Oh, what? 32% in the past 3 months, folks? Look at these travel stocks. They're being wrecked. Southwest Airlines has lost almost 35% of its value in the past 3 months, folks. 3 flipping flapjacking months. Remember, we haven't even had a stock market crash the last 3 months. If you told me, okay, S&P 500 is down 20% in the last 3 months, 25%, I'd be like, yeah, I understand. Southwest being down 35%, and Delta being down that much, and CCL being down 37%. We haven't even had a market crash. And yet these stocks are just crashing. And this goes back to the oil problems we have, right? Look at even Wynn Resorts. Wynn Resorts down almost 18%. Now, this is silly. Why is this silly? The reason this is so silly, what you're seeing in front of your face right there, okay, is Wynn Resorts' customer base does not freaking care about the price of gas. Wynn's customer base, it's completely irrelevant if gas is $5 a gallon, $4 a gallon, $6 a gallon. It doesn't matter to Wynn's customer base, okay? If they want to go to Vegas or Macau, they're freaking going to Vegas or Macau. That's Wynn's customer base. Wynn's customer base is not affected by oil price. I can guarantee you that, okay? It's irrelevant. Sure, they would like it cheaper like everybody else was, but these are the type of folks that are dropping, $10,000 on a vacation, at the Wynn, $100,000, $50,000, $200,000. Big money. Not little money, okay? That's not Wynn Resorts. It's a very different clientele base than, I don't know, the Circus or something like that, okay? Very, very different. Now, PayPal's shocking. It's shocking stock. It's $54 here today, folks. I'm in shock. Absolute shock in regards to PayPal. I haven't been this in shock about a quality name like this since Meta last year. When Meta made that move under 120 and then went under 100, that was shocking to me. I was like, I didn't see this one coming. PayPal's at this stage where I'm in shock with the price action in regards to stock. I can't believe it. I literally can't believe it. And you know what's crazy about this whole PayPal situation is these analysts keep lowering price targets, right? So they just keep adding more and more negativity around PayPal. Deutsche Bank, I love saying Deutsche Bank. They just adjusted their PayPal price target yesterday to $74 from $80. Oppenheimer, they cut their PayPal price target yesterday from $77 to $72, right? So you have all these analysts coming on, and just adding, let's call it more fuel to the fire and the negativity. And you got to understand the algorithms read all these different headlines and whatnot, and sells off. It's all types of silliness going on, okay? Now for me, what did I tell you guys? I'm buying the stock till the end of the year, right? I'm buying it all the way through the end of the year. And so for me personally, sticking to my plan, buying every share I can until the end of the year, okay? And by the end of the year, I should have my position built out exactly where I want it. And PayPal is my permission to go up after this year, okay? But for right now, I need the stock actually as low as possible. One, so I can buy as many shares as possible, right? I want as many shares of PayPal as cheap as possible. If I have a certain amount of money to put in, I'd much rather be able to buy more shares than less shares, right? But there's a hidden reason why I actually want PayPal shares as cheap as possible right now, okay? Outside of just me wanting to buy the stock personally at much lower prices, okay? And the secret reason is, I gotta get a drink. It's been a long week, my voice a little bit, not quite there. Twitch and everything. I had a 4-hour live stream yesterday on Twitch. That was insane for Tesla earnings. By the way, I'll be doing a live stream for PayPal, Palantir, and other stocks, okay? But in regards to PayPal, what's my other secret reason I want this stock so low right now? The company's got big share buybacks on right now. So the lower the share price is here in the short term, meaning over this next few months, the more shares the company can buy back, right? Which obviously for me as a long-term investor is the best situation possible. I need PayPal to get their hands on as many shares as possible while I'm also simultaneously getting my hands on as many shares as possible. So ultimately, I can actually thank these analysts that keep lowering the price targets on PayPal because the stock keeps going lower and it's like in this just ugly cycle. Because if it wasn't for them, and if it wasn't for the algorithms, I can tell you I wouldn't be able to buy PayPal at these sorts of prices right now. Nor would the company be able to buy the stock at these sorts of prices right now. So it is what it is in regards to that. As far as my level of confidence in regards to PayPal, it is extraordinarily high for the next several years, okay? Not just short term, I'm talking for the next several years. So we'll see. Maybe it has one last shakeout on these earnings. I don't think so. I actually think on these earnings it's going to go up. Probably double-digit percentage. That's just my guess. I might be wrong about that, and I hope I'm wrong. Because, hey, if they want to sell it to $49, it's more shares for me. It's more shares for the company. But I think there's a high probability the stock could blast quite a bit higher on the earnings. That's just my hunch. We'll see. That's PayPal. It's pretty shocking. Speaking about pretty shocking, RH stock is now down 39.33% in just the past 3 months, folks. It's about to hit 40% down. I'm being very patient with RH. I want to see this baby under 200. Under 200. I'll be honest. I want to see this baby under 200, and I want to start to add the stock aggressively, likely at the maybe December this year or maybe the beginning of next year. And the reason being is the real estate industry in the high end will be no worse than it will be this winter, in my opinion. This is going to be the peak worst scenario you could possibly get. And so I think RH sales are going to be absolutely brutally bad the next couple quarters here. But it gets no worse than it is. Because there's going to be no movement in the high-end housing market. No buyers, no sellers, no nothing. That's the worst scenario. You would much rather have a recessionary scenario where home prices are dropping, but at least people are moving, because that's a benefit for RH. So it gets no worse. That's what, the thing that everybody's got to understand in regards to a furniture retailer. It's going to get no worse than it will be this winter. So for me with RH, I'm hoping this baby goes under 200. I hope I can start building a position out. And then why everything's like doomsday around the company, I can kind of sneak in there, start adding shares. And then, the business model starts to turn maybe the end of 24 and into 25. And I've had time to build my position out. So I'm just being patient in regards to RH. There's so many opportunities in this market that I don't need to buy every stock, right? There's many stocks that are great buys right now, right? I just showed you PayPal's trading at $54. There's a shocking number. Like, you flip my flapjacks, you got to be kidding me, right? Now, in regards to housing, these stocks are getting wrecked. My Toll Brother put options are printing a little bit of money right now, okay? These papers are already up almost 40% in the public count. So in regards to Toll Brothers and these home builders, they're just, I think it's going to be brutally bad. No sales numbers. This fall and the winter is going to be, I think, one of the worst winters for new home sales we've ever seen, to be honest, especially on the higher end, which is what Toll's at. And if mortgage rates stay high into the spring, it's a disaster, folks. Because if mortgage rates stay high in the spring, like spring's the big selling season. You've got to put up your numbers. And if mortgage rates stay high all the way into the spring, these guys are going under 50. So we'll see. We'll see. But I'm feeling pretty darn comfortable with those put options, okay? Now, in regards to me with my biggest stocks, which stocks am I confident in that are going to report really good earnings versus bad earnings, okay? So these are my biggest positions in the public count. Now, the great news is the only of my big six, let's call it my big six, okay? My big six in the public count, there's only one stock of that bunch that I was very fearful was going to miss their numbers across the board. That's Tesla. Tesla was it, right? Outside of that, the only stock I'm kind of in the middle with is Elf. Elf has reported such great numbers. I'm like, could this be the quarter they finally disappoint? So Elf I'm kind of in the middle about. Tesla was the only one of the big six I was negative on. I am extremely confident in Meta's earnings coming up. I'm extremely confident in Amazon's earnings coming up. I'm extremely confident in Palantir's earnings coming up. And I'm extremely confident in PayPal's earnings coming up, okay? That does not mean all those stocks are going to spike on earnings. That's just kind of my 2 cents in regards to that. When I look at what's going on with their business models, Palantir, I think they're going to have a lot of deals to announce and a lot of very positive commentary on their conference call. I think the numbers are going to continue to improve. PayPal, Alex Chris on this first call, I'm expecting him to do a good job, and I'm expecting the numbers to be strong out of PayPal, and I'm expecting him to lay out the roadmap why PayPal is going to be in a better position than ever for this next many years. Amazon's going to report, I think, much stronger revenue growth than they have been reporting, and the net income is going to fly to the moon. That EPS is going to fly to the moon, in my personal opinion. We'll see. Meta, I think you're going to see much improved top line from Meta. But I think you're going to really see that bottom line booming. I think that earnings per share is going to shock a lot of people. They're going to be like, what did Meta just put up for EPS numbers? Like, what is that number? So for me, for this earnings season, I'm actually going in very confident. We got the one out of the way that I was very unconfident in. That one's gone now, Tesla. That was the one that I was like, and I don't think this is looking good, okay? That was the only one. The only one. And so, I don't know, I'm looking very bullish for the remainder of this earnings season. Very, very bullish, especially for a lot of the stocks I personally hold. Okay, now that we got good old Tesla my ass out of the way. Now, I will be buying stocks tomorrow, okay? If you want to see exactly what stocks I'm buying tomorrow, check out my Patreon. That's going to be pinned comment down there. Join in there. You get to see the moves I'm making every single week, what stocks I'm buying, what stocks I'm selling. You get to see exactly how I build up a portfolio. And we also have a tier now, folks, that has some courses included in it as well. So that's super, super valuable. Make sure you join in there, see the moves I'm making, learn how I build a portfolio out from top to bottom. It's extremely valuable to kind of see exactly what I'm up to and exactly how I play this game, okay, with real money in a real Fidelity account, okay? Appreciate everybody joining me as always. Thank you so much for being here. Thank you for being subscribed. I'm so happy. I'm so happy it's earnings season, folks. Drama, 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 and have a great day.